crop sizes last year, and you know, the world is definitely a different place, okay? And if you guys remember, I'm going to talk here the first few minutes on world currencies, okay, and the impact that that has on commodities and what's going on in the world. So if you guys remember back in about mid-February, the Swiss bank decoupled their currency from the euro, okay? And on that day, this is what happened. The euro appreciated by 30% in one day, okay? The euro had been pegged at the Swiss currency had been pegged at the euro. They decided to decouple because of the fear that the European Central Bank was going to add a stimulus package. And they did, in the tune of €1 trillion, okay? And what that did was that caused the US dollar to strengthen and the Canadian dollar falling. Here's the Canadian dollar. Here's the day when the Central Bank of Canada raised interest rates and caught everybody off guard and so on and so forth. And so that's what's happening. Lots of volatility in the Canadian dollar in the last several days. And here last week or so, a 77-cent Canadian dollar. Okay. And that's why we're still seeing, you know, fairly decent prices for your commodities here locally in Ontario, because of how that change, you know, from a 90-cent dollar to a 77-cent dollar is affecting your basis, right? So the Canadian dollar is working itself lower. Just I remind you here that back in 2009, the Canadian dollar got down to 76 cents. We still haven't taken out that number yet. We've been around as low as 77. 2002, I was a grain trader working for Cargill Limited at the time, and I remember making basis using a 60-cent Canadian dollar. So, and then here, of course, is the US dollar, okay? This day right here was last Wednesday, I mean, March 18th, okay? On March 18th, Janet Yellen from the Federal Reserve in the United States made a statement that they're going to remove the word patience as to the view of when they're going to raise or not raise interest rates, okay? Interest rates in the U.S. have stayed the same since 2006 and haven't changed, okay? So when Janet Yellen spoke, it caused the U.S. currency to drop 5% in one day, okay? And then they realized they kind of overdid it and brought it back up and so on. But with that is Janet Yellen did two things. A, she removed the word patience as far as what their thoughts are as interest rates and so on and so forth, but then also turned around and said, yeah, but the U.S. GDP is slowing down, right? So her view was that the growth in the United States isn't quite as, you know, robust as maybe what some of the indicators were showing. And so again, lots of volatility in the U.S. currency. Current event, actually overnight and this morning, Saudi Arabia is making attacks on Yemen over there as far as things that are going on. That's caused a lot of uncertainty and fear in the world markets again. And first thing this morning, the US dollar was dropping, which kind of goes against the idea when there's fear and uncertainty, they go to the US dollar as a safe haven and go up. Well, right now, when I look, I'm telling you the US dollar is going up, right? So crude oil this morning was up $2.30 and so on the idea that maybe there could be some unrest over there in the Middle East and so on. And so, you know, almost seems like every day nowadays there's something geopolitical or macro markets or other things that are affecting what's going to affect your pocketbook as far as corn, wheat, and beans goes, right? And so far I've been talking 10 minutes, I haven't even mentioned corn, wheat, and beans yet. I'm supposed to talk about the commodity markets. So anyways, these are various things that are happening. There's the US dollar and where we are in today's environment. And I mentioned, you know, trading a 60-cent dollar in 2002. And that's the kind of the U.S. currency index that we had back then. I know you can't see the numbers, but the U.S. currency index was at 120, okay? So, and again, it's very important that we're understanding, you know, what's happening with the U.S. currency and so on, because I was at a presentation a couple weeks ago and the speaker there was saying that he's fearful that the U.S. currency is going to go on a multi-year bull run and maybe kind of challenge this type of stuff, right? Which probably means a 60-cent Canadian dollar, and $4 basis on beans, or whatever, right? But again, we have to figure out where we're going with that, right? So how do we figure out where that's going? The U.S. currency index is comparable to a basket of 20 other indexes, right? The euro is 75% weight of that basket, okay? And here's the euro, okay? And so when the Europe fell out of bed, when they introduced the stimulus packages and so on and so forth, and now it's come back, and for the last 3 days and the last third time in the past 7 days, it's challenged this $1.10 value on the price of the euro, right? And that if the euro wants to break above that, it may want to come back up here and challenge this platform area in here, which could trigger sell stops in the U.S. dollar, meaning that the U.S. dollar will drop and the Canadian dollar will go higher, right? So there's a lot of various things that we need to look at. Another interesting chart here, the Brazilian real, okay? When I'm going to talk to you about soybeans and world supplies, commodities, and so on and so forth, the Brazilian harvest is pretty much wrapped, and overall is over 50% harvested. And in Mato Grosso, the largest producing area of soybeans in South America, they're pretty well 90% done. Okay. The Brazilian farmer is still seeing the equivalent of $13.50 a bushel for beans. Last week, the Brazilian currency was a 30-cent dollar to the U.S. index. Right? Imagine what that does for them and what they're doing as far as selling beans, selling them off the combine, good price, so on and so forth. And so they're moving the beans, right? What I'm really fearful about this chart is what's going to happen next year. Okay? That Brazilian farmer is not going to slow down growing beans, regardless of the fact that we've got record world supplies and so on and so forth. Why? It's a margin business. He's going to still make good dollars growing beans, where his currency is, right? So again, lots of variables that are affecting, the overall grain movement around the world, globally, and so on and so forth. And who can be competitive, who can not be competitive, and so on. So just certainly some interesting factors that are going on. So into the grain side of things here quick. All countries around the world last year basically all made record crops, okay? And so we've got lots of supplies, and you can see here that the world ending stocks on wheat is 197 million tons. And you can see just here how world production of wheat is, escalating and so on and so forth. And again, just a common theme that everybody had good crops last year, okay? Yesterday, the Canadian Wheat Board came out with estimates for 2015 world wheat production at 703 million tons, up 21 million tons from last year, and compared to 724 million tons that they had last year, okay? This morning, the International Grain Council has come out with their predictions for global production of corn, wheat, and beans, and they're all also quite lower too. So, maybe this idea of making record crops 2 years in a row, started to, become not a reality. Certainly by what some of these private forecasters are starting to talk about. Okay. I want to talk about wheat quickly, simply because I think wheat is the only commodity right now that has a story behind it. It's the only one that maybe has a bit of a fundamental impact to it, and partly because everybody's wondering what's happening with the Russian wheat crop. It went into the winter conditions kind of dry. They've had a pretty harsh winter over there. It's way too early to be looking at their, just like what are you guys looking at your wheat crop, right? So it's too early to say what's really happening with that Russian wheat crop. But there's a lot of talk that perhaps it's not really as good as a lot of people are talking about. The USDA's got it pegged at 59 million tons here. You can see it's only, that's almost a record compared to only 2 other times when it was north of 60 million tons, right? So if they start inching down that world production number in Russia, that's what the world's going to want to look at. Again, there's a stocks to use ratio on world wheat. Places around the world that they grow wheat, and again, what they're thinking about here as far as winter kill and other things that are happening over there, both with the Ukraine wheat crop and also the Russian wheat crop. Ukraine wheat crop is starting to, maybe come out of some of that and looking maybe a little better. But here's the wheat market, and all I want to talk about here is that the money flow and the impact of speculators in your commodity markets, and how they just like to see big swinging markets in the commodity sector, right? And so, if wheat does want to come alive, and you'll see here in this next chart, there's my charts from last night, and you can see here that we have had a good rally here back in December, and even just so far in March, we've had a bit of a rally, and that's based on dryness concerns in the southern plains of the United States. Okay, and here's a rally last year that was a $2 rally based on drought news that was in the southern plains last year. Right, so I'm not thinking we're going back to 780 futures anytime soon. But just to get a bit of a rally on wheat, and you can see we went to 540, we hit it twice here. Now, unfortunately today, because of all the outside factors in the commotion in the world, the wheat price is actually down 15 cents, and it's dropped through my support line there, right? But, as this crop gets looked at, Kansas is concerned. They're concerned that Kansas is going to be dry, into the middle of April and so on and so forth. So, if there's more weather development stories, more stuff happening with the winter wheat, maybe we take out this 540 number. We'll kind of go halfway up this chart. We see $6 wheat futures plus $1 base is where we are for new crop because of our low currency. We may see $7 wheat or something like that by the time you go into harvest with it, right? So. Again, it's really the only crop right now at this point that has some sort of a fundamental story behind it as far as growing conditions and so on and so forth. In 2013, Canada made a record crop of 37 million tons of wheat, right? And then the very next year, we're right back to average, right? So I just want to point that out when I talk about corn in a few minutes, right? So, hopefully we don't have another repeat of last year as far as that goes. World ending stocks in corn, 185 million tons. It dropped 4 million tons from February into March. So you can see that, but that's still a very healthy number as far as the world ending stocks. You can see it there, 19% stocks to use ratios, and 195 million tons of world carryover of corn. Hasn't happened since the mid-90s, right? So world corn production again. Here's Stats Canada, Canadian Wheat Board, and they're lowering overall corn production by 16 million tons next season and so on. So maybe it's not always going to be back-to-back perfect world 2 years in a row. Brazilian corn again. When prices fall, some of these foreign countries around the world are going to have a little bit of reduction in their acres and so on and so forth. I'm going to kind of go through China. China's got some moldy corn, and China's doing a really good job of buying sorghum. Right? So China may not be buying a lot of U.S. corn, but they're buying record amounts of sorghum. So that's kind of what's going on with China. Soybeans, same thing. On the world ending stocks of soybeans, 90 million tons of world carryover on soybeans. And again, chart-wise, you can see that's a brand new record, the most amount of world carryover of soybeans I've ever seen. Okay. Next Tuesday, guys, is the first forecast of the United States acres guesses for this year's crop. Okay. And they're talking about 2 or 3 million acres more beans in the United States. What's this number going to look like a year from now? And again, what's Brazil going to do with their production stuff and so on with soybeans next year, right? So again, world soybean production just continues to go higher and higher. Again, Canadian Wheat Board is thinking next year's production is 299 million tons off 16 million tons. So we'll see how the world responds to what they're doing with the beans. Soybean production. Yesterday, soybeans went down 8 or 10 cents on the idea that one of the agencies down there increased the Brazilian production from 94 million tons to 95.8 million tons. So saying that, they're kind of over downsizing the crop size back in February, and now that it's getting harvested and stuff, they're thinking the crop's a little better than they thought, right? So, you know, it was interesting here that the Brazilian farmers were slow to sell a bunch of their crop back in mid-February, but has since moved a lot of the product. It's coming off the combine. They're getting good prices for it. Last Friday alone, they sold 1 million tons, and in the 10 days prior to that, they sold 15 million tons of product in Brazil. So those farmers are doing a good job getting rid of their product. And again, here, because of that Brazilian real, as I was saying earlier, that you're getting the same as $27 to $30 a bushel in Brazil in real terms, or the same as about $13.50 to $14 US dollar for soybean because of what their currency's been doing. Argentine soybean production, 56 million tons. You know, basically, they have had ideal conditions, more or less, good weather and so on and so forth for the Argentine crop. Exports are going to stay strong out of Brazil. One of the reasons that the world is all of a sudden got all this massive supply of commodities is, according to Chris Hurt, the world has added 157 million new acres since 2006. Right? That South Africa added 45 million. South America added 45 million acres, and South Africa added 22 million. Russia added 21 million. The United States added 9 million. So interesting how when we had $7, $8 corn prices and $15 bean prices, how the world responded and just started clearing acres galore and put everything into the ground. Right? So that's kind of why we're looking at all these record supplies of commodities right now. Soybean meal. This is the activity that we had, you know, through the summertime. Very volatile markets, went all the way to a low here, and then bounced out on October 1st. And this is a real description of your money flow. Okay, so the funds were selling soybeans and soybean meal. There's when the acres report came out last year, and they added 8 million acres more beans, and soybeans themselves dropped 66 cents on that day. But basically, you know, then we got into harvest, and the Southern Plains, we're talking about 70, 80, 90 bushel bean yields last fall, right? And so the buyers of soybean meal said, well, I'm not buying meal now. The yields are good and record crops. I'm going to wait. And the commodity prices just fell, right? And then we got to October 1st, and by then, we're not really harvesting beans in Iowa and Illinois and so on because of the wet fall. You guys remember last year's fall. You hope to forget it for a long time, I guess. And so then the market started to rally. And as the market started to rally, the farmers said, well, I'm not selling, the prices are going higher, right? And so then what happens is these guys were selling soybeans all the way down to here, and by the time we got down to here, the funds were record short, you know, 235,000 contracts, record short, right? So then as the market started to rally, you know, we got into this area. I thought, okay, now we're going to, you know, equal this and go sideways and make it a perfect heads and shoulders move. But in fact, the market in 2 days here went up $67 a ton on soybean meal. And that's because the funds were caught on the wrong side of the ship, more or less, and they had to buy futures to cover their margin requirements because of the dramatic move in the prices. Okay? So again, most of that activity, you know, had to do with funds and so on and so forth. This is the meal chart as of today. So there's a big action I was telling you about. Now we've kind of, you know, go inside. You know, there's a reason that periodically we come back up north of this upper support line. And that's simply because of the margins at the south in the U.S., the margins that are getting made at the crush plants. Right? These crush plants are still doing a great job capturing margin, buying the soybeans, you know, putting them out there into the marketplace and making, you know, $1, $1.20 a bushel margin on soybean meal. So that's why we continue to see this volatility in the soybean meal market. And you know, it's hard for me to tell you that soybeans are going to continue to go lower and lower and lower when we have a strong soybean meal market, right? The other thing with that is that unfortunately in Ontario, you know, we're not really seeing the benefit of all that because of where our currency is going at the same time, right? I asked Brazilian farmers last summer at a grower meeting whether they continue to grow beans wall to wall, and they all said, "Yup," you know. And, so I said, "If beans are only $7 futures, we still grow wall to wall beans?" And, their heads all go out, you know. So it was interesting talking to Brazilian farmers. They're just like talking to you guys. Right? First thing they want to know is, what's your yield like? You know, and how much is land rent, right? And you know, they wanted to say, can we look at a soil test? You know, all these types of things, right? So then I had the opportunity to speak to, this is the translator right here. So I started saying, well, what are your yields like? All they said was, high, right? I said, what's your land rent like? Well, we pay by the sack, you know, so you couldn't really get a real answer out of me. But certainly it was interesting to have the dialogue with those guys, right? So, you know, when we're talking about commodities, you know, there's certain things like sugar and copper and wheat's classified. I'm talking about things that they classify as world commodities, okay? And you know, there's been a lot of talk, you know, about what the U.S. is going to do as far as interest rates and you know, that kind of stuff. Just showing you here that this is what bear trending markets can actually look like, okay? And this is the sugar chart. This is weekly sugar futures going back to 2011. And basically for, you know, we're 2015 now. This thing's dropping for 5 years straight type of thing, right? So this is copper market. And just showing you the same kind of thing. And if I put, this is the March copper contract, and if I put copper on a weekly chart, it looks just like this. It's been dropping for years, right? And they often say that copper has the PhD on the economy, right? So whether or not, if you want to know whether, you know, the U.S. economy is growing, or more importantly, whether world growth is happening, is China growing, is Europe growing, so on and so forth, you kind of want to look at copper and see what it's doing. It might be a leading indicator, right? Well, that chart doesn't tell me anything about being a leading indicator, right? This is an interesting chart. This shows you that 90% of the industrialized world is at 0% interest rates. So here we're talking about maybe the U.S. wanting to raise interest rates, right? They'd be one of the first countries in the industrialized world that will start raising interest rates. And I think if they did that, their currency is just going to go right to the moon, right? So there's a lot of reasons why Janet Yellen's using the word patience and looking at inflation. Like typically when you raise interest rates, you're doing it to control inflation. The U.S. has no inflation right now, right? Very, very little. Their monthly target rates are 0.6, and over a yearly look, it's about 1.6% inflation, whatever. Well, they're targeting 2% interest rates. Sorry, they're targeting 2% inflation before they want to raise interest rates, right? So, and then you got, you know, then what's the rest of the world doing too, right? So on the corn and beans and stuff, the United States last year, here was the big deal last year, that they made 91.6 million acres of corn and 84.8 million acres of beans. That bean acre was up on that June report there. The bean acre was up 8 million acres. Okay? But at the end of the day, corn went to 90.6 versus the June report at 91. So they backed off the corn acre by a million. Showing you here that back in 2006, 2007, that the U.S. corn acre went up by 15 million acres in 1 year. And that's when the farmers were responding to the market. They were responding to the strength in the corn prices and responding to the market, because basically the U.S. was saying, grow corn. We got this thing called the ethanol industry, and you boys need to grow corn, right? So the farmers responded and planted 15 million acres more corn at the expense of losing 15 million acres more beans, right? And there's the 8 million acres more beans that they grew last year, and not only that, but they made a record yield. It's hard for me to stand up and say we had a record acres and a record yield, but apparently they did, right? So, but the reason that the U.S. farmers in 06, 07 dropped 15 million acres of beans is because they had a 600 million carryover, right? Farmers said, we got tons of beans, corn market's saying grow corn, so we're going to grow all corn we want, right? And ever since then, the U.S. has been kind of at 100 million bushels carryover ever since, right? Until this year when you planted 8 million acres more beans, and that's what you end up looking at, right? But this is the other major factor right here. Last year, guys, the U.S. farmers planted their crops, and the crop scores came out at 75% good to excellent for the entire year. It never will look bad, right? When the drought scores, when the crop conditions suffer from drought or the things go down, they call this killing the crop, right? We never killed the crop once last year in the U.S. market, right? Not on corn and not on beans, right? And that's why at the end of the day, we have 171 bushel corn yield. We have 48 bushel bean yield, right? And so, remember I showed you earlier about the Canadian prairies making a record wheat crop, and then the very next year right back down to average. So as we start looking at acres and forecasts and what the U.S. is going to do for next year, you kind of ask yourselves, what are the chances of the U.S. farmer making 171 bushel yield back to back? Okay? So next Tuesday they're going to come up with acres forecast and so on and so forth. And they're talking about, the average guess is 88.9 million acres of corn, and the U.S. government's using 166.5 yield today. It's not even out of the bag, and they got the second biggest crop ever on the balance sheet. Reality? Maybe, maybe not, right? And you know what? When I look at Ontario farmers and what we've done as far as yields and so on and so forth, I kind of think, well, yeah, we've had a lot of good years in a row of good crops, right? But we're also only 2 million acres, we're not 90 million acres, right? So, and some guys look at this chart and go, well, here's a record year, and then 9 years later was another record year, and then 5 years later was another record year, and then 5 years later again is another record year, right? They kind of think it only happens once every 5 years, right? So, we'll have to see, I guess. So U.S. corn production last year, 14 billion bushels, new record. Here's the supply and demand report that came out in March. And all I really want to show you right here, guys, is last month, both feed use and ethanol use were the exact same number, right? And that in 2015 here, for a bit there, the U.S. ethanol was the largest user of corn in the U.S., okay? And technically right now we're spitting seconds type of thing, right? This is the outlook for the acres. I kind of talked about that. Feed use. So U.S. ethanol right now is 5.2 billion bushels. I mean, it's a new high water mark for how much ethanol they're going to use. Corn exports are going to be down 6% year over year from last year. U.S. corn ending stocks are 177.7 million, and so you can just see that we have solid corn export supplies, and that's why when the market tries to rally, it kind of goes so far and stops, right? And I'll just go right here. So here's old crop corn, and guys, if I actually take out this harvest low, and maybe we went too low too quick and bounced out of it, but if I get out of this harvest low, you can see corn's basically been going sideways since last July, right? And that's a function of when it tries to rally, it kind of gets knocked to its knees because of the strength of the U.S. dollar, and because they're recognizing anytime we're competing against world markets, so on, we can't really do it because of the strength of the U.S. dollar, but also because we just got plenty of supplies around, right? And so there's no real. This is a different market where now we have plenty of supplies. It's more about how much demand is going to be, so on and so forth. You raise these prices too high, you're going to lose some of that demand, and so on and so forth, right? Interesting, just yesterday, we had closed the corn market at 395 futures, okay? A week ago last, we were down to 367, okay? Today I'm trading new crop corn at $5 a bushel picked up in the yard in January, okay? It was $4.90 for harvest picked up in the yard out of the elevators, right? So just trying to show you that when we get up to these upper resistance values, look at that, see what the value is, and kind of go, okay, do I want to be a $5 corn guy? Because there's been opportunities when we're getting there, right? And then very quickly the next day, they're gone, right? This morning I could do those values, right now we can't because we're off them, right? So it's just kind of recognizing what's happening in the marketplace, right? So the corn average estimate for next week is 88 million acres. It is in a fairly large range. It's also the quarterly stocks numbers, and 7.6 billion bushels left over in the supplies versus 7 billion last year. Another big range as far as the guesstimates for stocks. The March 31st acres of stocks are usually a market mover in the markets, okay? And this time around, compared to where the average guesses are, it really means maybe there's 100 million bushels difference in the supply. So I don't think a movement of 100 million bushels on the ending stocks is going to do a whole lot. And the acres thing, maybe it would be bearish if we're north of this number here, because everybody's kind of talking less corn acres, right? So if all of a sudden it comes up. And the other thing, guys, this is just an intentions report. We went through these reports last year, didn't really need much. We got to June, the final April, whoa, there's when the markets moved, right? So that's kind of what we're looking on the corn. On the beans, average estimate is 85 million. I think that's a tad low. Last year's crop size was 85.7 million, so that's only a little wee bit more acres than last year. There's a lot of guys in this, up to 2.5 to 3 million acres more beans next year. So just